Hey everyone, Micron Technology is experiencing an increase in demand due to the rising effectiveness of artificial intelligence and the increasing needs for memory and storage on edge devices. So the CEO was quite optimistic about its prospects, and you might not believe what the CEO of Micron Technology had to say about its prospects in the near and long term. So in this video, I'm going to share with you those comments, and I'm going to share with you what I think it means for Micron stock investors. So let's jump right into the details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so Micron CEO saying that the company delivered revenue, gross margin, and earnings per share above the high end of the guidance ranges they provided at the previous earnings call. So all of those metrics came in much better than expected for Micron Technology. And that wasn't the exception. Companies that operate in the industry that benefits from AI have nearly all been reporting revenue, profit, and earnings per share better than expected, as demand for AI is coming in much stronger than expected. Although some of that enthusiasm is ebbing ever so slightly, it's not increasing at an increasing rate anymore. As I like to say, the second derivative is slowing somewhat. Now, I'll talk a little bit more about that as I move further into this video. So the CEO saying that they are in the very early stages of a multi-year growth phase catalyzed and driven by generative AI. Just in the beginning stages of a multi-year growth phase. That's got to be great news for Micron stock investors that have seen the company struggle a bit due to oversupply of inventory in the industry, right? So this is great news for Micron stock investors, to be sure. The CEO continues to say the improved supply demand environment in the current calendar quarter drove a strong inflection in industry pricing. And that was the big headwind in 2023. There was too much supply. And so many of these companies, like Micron, decreased supply, decreased manufacturing, so that supply and demand could better balance. And that came through in its latest quarter. And that's going to continue throughout 2024. That's going to be the story. Micron is going to increase supply at a rate that's slower than the increase in demand. So they're going to let demand catch up with supply. They're not going to grow their supply as quickly because they want to benefit from higher prices. And you can't benefit from higher prices when there's too much supply. So that's going to allow them to benefit from the higher pricing. Now, they intend to stay very disciplined with their supply and capacity investments, like I mentioned, as our pricing is still far from levels associated with necessary return on investment. Still far from levels. So they're really going to constrain supply. They're going to keep supply restricted so that inventories can decrease and then they can have better pricing power. So they expect their pricing to continue to strengthen through the course of 2024, and that will allow them to improve profit margins and financial performance throughout 2024 and record industry total addressable market in 2025. So they're really preparing themselves for a record boom in demand in 2025. And that boom in demand is coming on the back of rising effectiveness of artificial intelligence. Micron expects more of AI capabilities to be driven to the edge. What that means is devices like phones and laptops and tablets are going to be equipped with more artificial intelligence capabilities. And that's going to be great news for Micron because that means they're going to require more memory, more DRAM, more storage. So that's all going to fuel an increase in demand for Micron's technologies. So like the management already highlighted, inventories for memory and storage are at or near normal levels for most customers across their personal computer, mobile, automotive, and industrial end markets. This was not the case earlier in 2023 and middle of 2022. There was way too much inventory as the rapid shift in consumer spending caught these companies off guard. Remember when we were spending more time at home during the lockdown phases? people were spending more money on electronics, and then suddenly, when economies reopened, there was a rapid shift in consumer behavior. They significantly changed from buying electronics to spending money on travel and restaurants and bars and experiences where they're not benefiting Micron Technology as much. So generative AI use cases are expanding now from the data center to the edge, with several recent announcements of AI-enabled PCs, smartphones with on-device AI capabilities, as well as embedded AI in the auto and industrial end market. So the initial boom in demand for AI technology came in the data center, right? Hyperscalers like AWS, Google Cloud, Microsoft Cloud, those categories were where the initial demand for artificial intelligence has soared. But what Micron is seeing now is that's moving closer to the edge. It's moving closer to the consumer, closer in the ways of personal computers, smartphones, cars, and businesses, enterprises, security cameras, security technology. All of that is closer to the customer and away from the data center, which experienced the initial surge. And Micron expects an increase in demand for its products due to this shift, due to this broadening out of demand for artificial intelligence technology. So data center total server unit shipments are expected to increase by mid-single digit percentage in calendar 2024, following a year of low double-digit decline in calendar 2023. So I've said this before, but I'll repeat it here. When management says mid-single digit, they mean 5%, 6%, or 7%, or 4%, 5%, and 6%. When they say low single digit, they mean 1%, 2%, or 3%, and high single digit is generally 7%, 8%, or 9%. So mid-single digit here, they're expecting 4, 5, or 6% growth. Low double digit is something below 14%. So 10%, 11%, 12%, or 13% in 2023. So demand for artificial intelligence servers has been strong as data center infrastructure operators shift budgets from traditional service to more content-rich AI servers. And many of the companies that operate and serve data center segments have been talking about this need to upgrade data centers overall. A massive opportunity to upgrade data centers from traditional servers to now these more content-rich, enhanced servers specified for benefiting from artificial intelligence. So that's going to fuel a huge upgrade cycle for these data centers as companies upgrade them from their legacy methods to now this next generation models that's going to be necessary to keep up with the latest technology. And that's going to benefit Micron as well, as they see total server shipments expected to increase by mid-single digits in calendar 2024 after a low double-digit decline in 2023. So a big turnaround there in the data center market. So all of this is great news for Micron stock investors, and you can start to understand why the CEO is so optimistic about its prospects in 2024 and beyond. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.